India's IT services exports crossed a whopping $150 billion last year. The IT industry has been a beacon of good growth and governance for the past 2 decades. Despite a gloomy macro outlook and a near-term growth slowdown, the IT index is at a 52-week high. So, how do we go about viewing this? How do we value these companies? Should an investor even look at the IT sector as the industry has reached a mature stage? Will new technologies like generative AI and the rise of global capability centers in India disrupt their business model? For answers to these and more, join us next Saturday, the 2nd of December at 11 am.
Has technology really helped investing? This is a question that's been on my mind for a very, very long time, and I keep closely watching how technology is impacting our life and our investing. The more I think about it, the more I see contrasts. I see technology help us in bridging the information gap. Today, wherever you are, in whichever part of the world you are, whether you are in a rural or an urban setting in India, you can access information at the same time as somebody in BKC, which is the Bandra Kurla complex, which is where concentration of financial decision making is the highest in our country. So, somebody could sit in a Starbucks in BKC and look at his phone, and somebody could be in a hill station in a very chilled out, laid back life looking at his phone, and both of them get information, corporate disclosures, news analysis, everything real time. So, technology has actually bridged the information gap. It has made investing extremely competitive as a result. I still remember in 2009-11 phase, if one took his journal and wrote out new ideas which look attractive, we could fill multiple pages. Today, I would think filling a few pages itself is a challenge because valuations are extremely elevated. Any idea gets easily discovered by somebody or the other. I attribute this competitiveness not to any negative factor, but to the positive impact made by technology. By virtue of completely flattening information access, technology has made investing far more competitive. It has also increased the number of investors in the stock market. People participating in the equity market have increased multi-fold, and the sole reason is technology. But for technology, you would not have so many people participating in the equity market. But has this really done good to the participant? Has he really got the right experience? That question takes you a little closer to the reality. It makes you take a harder look at what technology has done to the behavior of crores of Indian market participants. And then you see something that's not looking good, something that's bordering on the dark. Bringing participants into the equity market makes sense if you make them invest in the equity market. But if you see that most of these people who come into the market are only speculators, then you realize that technology has created more behavioral damage than anything else. You realize that people believe in something which will not do them long-term good because they hope and pray that in the short term it will deliver a bounty to them. So effectively, technology has made people more greedy by giving them access to do things which they should not do. I mean, if you look at anything that is not good for people, you warn them, right? a cigarette packet has a huge disclaimer. If you buy a bottle of liquor or wine, it has got a disclaimer. But there is no disclaimer when you go and speculate in options and futures. Nobody is stopping you. In fact, we see a newer generation of people who think that's the only cool thing to do. If 25-30 years ago, any of us had told that we are doing F&O and we are doing forward trading on the BSE, it would have been looked down upon. It was not a respectable thing for people to do. You had to do something better. Many of us avoided doing it simply for the reason that it would be looked down upon. Today, the exact opposite has happened. People think that you will be looked up to only if you are a speculator and a trader. And I think this is largely due to technology. Otherwise, you would not have created so many people with the wrong set of beliefs and aspirations. If the number of people who have this belief and aspiration was say 10 or 20% of the total number of people who have come into the market in recent years, then you could say that that's not going to damage the market too much. These are the exceptions. But I think that only 10 or 20% of the people who have come into the market in recent years are actually thinking right. It's more people thinking that they must be speculators and they must be in it for the short-term benefits. This is not a good thing, and I think technology has to take ownership. The ownership is societal also, because somebody has to create warnings, somebody has to create deterrents, somebody has to create defense mechanisms so that those who should not lose money don't end up doing that. There are a lot of people who should not be doing that. Just like you say that a cigarette should not be sold to an adolescent, or alcohol should not be sold to an underage person. Speculation and trading should not be permitted to a certain set of people who are not financially capable of taking those harm and pain. But that's not happening here. If you have got 5,000 rupees, you are free to lose it on your phone. And we see people committing suicide because they took loans on the phone by quickly taking a personal loan or fintech loan and then taking that money through the phone into the platform and then speculating on the platform and then losing it all. And then taking another loan, and after taking 4 or 5 loans and losing everything, these people end up taking their own lives. I think but for technology this would have never happened. And the onus of repairing this is on nobody. So it keeps growing. I see a lot of people worshipping those who have only made money by creating this Frankenstein in society. I have no problem with that, but at least those who want to save themselves must realize what is wrong with technology. And most of the people who think that technology can only do good to society come from the technology space, though they all work in that industry, so they think that they can do no wrong. But if you look at the investment world, the harm done by technology on behavior is irreparable. Technology cannot repair that. Somebody else, maybe a regulator or government, has to repair that. And we'll wait for that. But I've given you two contrasts. You made the investment world flat on information, but making it flat for speculation, for behavioral harm, is taking away all the benefits which the information edge has given. So people are getting access to do things which are behaviorally very, very harmful to their financial status and probably to their health and life itself. So it's been a mixed bag as far as I see. And there is no warning, or there is no deterrent, or there is no effort to keep people behaviorally safe. Everybody has access to do the worst. If you have money, you can do whatever you want to destroy yourself financially. and you get the money also very easily through technology. So there is a value chain for destruction which we have set up so effectively, and this destructive value chain is something which society thinks is very good for it, and the technologists, those who work in the technology field, think that they have done something revolutionary. Time will tell us how wrong we are. Thank you for watching this video.